Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. First, this is the last FANG Friday of the year, and on behalf of all of us at Strategic Analysis Corporation, I would like to wish you a wonderful holiday season. I have to add that I think that this has been a happy year for our FANG Friday viewers, even if it has been a bit tricky to navigate. Second, I need to alert viewers that we are not accepting any more applicants for our special hypervalue webinar on January the 5th. We were oversubscribed, but we will try to schedule another one later in the year. Finally, for those of you who have registered, you will receive a confirmation email in the new year with instructions as to what will be transpiring. Turning to the FANGs themselves, I should observe that presidential election years tend to be bullish for the stock market. Given what is looking to me very much like strong support from the U.S. Federal Reserve Board in terms of de-risking the economy and the stock market, I expect that prices in general will be rising, and prices and valuations, the FANGs specifically, will be going along for the ride, despite some pretty aggressive valuations for this group. Right now, we really need to take a close look at those FANGs and what has been going on. But as always, before I do, I like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with Amazon. And Amazon had been hugging its bubble price, and just very lately, it looks as if it's perhaps being on the verge of starting to lift off again. And that would not be terribly surprising given that strong improvement in the fair market value trend. Alphabet, almost the same thing. It's been sort of moving along its MSG price, that's 5.5 times book value. And it, too, has been picking up very, very recently, perhaps not as strongly against a powerful rising fair market value, but nonetheless, actually, Alphabet is very, very cheap compared to the rest of the FANGs. Meta, which had been actually moving along either side of its mid-super growth price, again, that's 5.5 times book, looks as if it is breaking out again, but it still looks to me very much as if it wants to go to its bubble price, which, as you will recall, is its very, very long-term high, reached 3 times before that big crash and burn. Netflix, Netflix is had kind of an interesting year, hadn't it? It got to the bubble price and exceeded it, which you remember did surprise me a little bit, and then failed. However, it had very, very powerful third quarter earnings, which has really driven the stock higher. And I would suspect, in terms of anticipating what the fourth quarter is going to bring, that we are seeing, again, a good pickup in this stock. I think the HB1, which is 9.5 times book, is, I hate to say anything is sure, but it looks to me as if it's in the bag. And then the question is, what after that, if those earnings and sales continue to expand the way that they have. Microsoft and NVIDIA I have to sort of lump together. These are the two artificial intelligence stocks, if you like, in the FANGs. Not that everybody, of course, is claiming to be using artificial intelligence. Of course, they are. But these are the sort of the core AI stocks. What I have seen just very recently, however, is not exactly a powerful rise in these stocks. Yes, they're sort of oozing forward, but we don't have any of the power, for instance, that we see in a Netflix. And it does make me wonder, because I have some concerns about the earnings potential, particularly in the near to intermediate future for AI. And the stocks seem very much to be confirming my concerns. Apple, look at Apple. It's right back to its $3 trillion market cap. But what's been going on as far as their sales and their earnings are concerned? Not much. And the stock is expensive. It does concern me that what is going to be the driver of this company in the next year, except for possibly the market itself. And finally, Tesla, the same kind of a story. Now, it had been trading. You notice that in that little band there, and it looks as if it may be breaking out there. But you see, when I go down and I look at the fair market value and the trend of earnings, I do have to say that I have some concerns. However, my suspicion would be that with a decently strong market and the FANGs themselves moving on up, that these stocks will probably be carried higher with them. Anyway, to briefly summarize, my summary this week is quick and easy. The Magnificent Seven in general have been oozing higher, and given those promising words from the Fed last Wednesday about not one, not two, but possibly 3 rate cuts in 2024, some of the risks in the market appear to have been at least modestly alleviated. And as we just saw from the SVA charts, the FANGs are more or less in a holding to moderately rising modality. Amazon, Alphabet, and Meta notably all look to be heading higher. Netflix, which has been in a world of its own, have been sort of stalling a bit, but it too has picked up nicely very recently. I suspect that those last quarter numbers, which gave it a new lease on life above its bubble price, that's 7.4 times book, will be matched by the fourth quarter as well. I must observe that both Microsoft and NVIDIA, the two what I might call the kingpins of the AI stocks among the FANGs, have not been particularly holding up their end of the performance grid, which does give me a little pause looking forward. Finally, Apple and Tesla do continue to be a concern because of their longer-term potential growth outlook, but they are likely to be pulled along by the FANGs in general and the Magnificent Seven in particular. Now, for those who have signed up for our valued webinar, I look forward to chatting with you on the 5th of January. And finally, once again, I want to wish all of you a pleasant and profitable holiday season. It certainly looks to be shaping up that way. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you in the new year.